Hello and welcome to Views from the Market, mid-market private equity and M&A in Canada. My name is Mario Negro and I'm a partner at Stikeman, Elliott. For today's podcast, I'd like to welcome our special guest, Sebastian Dante. Sebastian is a managing director at Clairvest. Sebastian, thank you for joining us and welcome.
Thanks, Mario. It's very nice to be here.
Sebastian, we always start our podcast by asking our guests to tell us a little bit about themselves and about their history, and in your case, about Clairvest. So I'll start there.
Well, Mario, I'm a French-American citizen who ended up going to McGill for my undergrad and planted my roots in Canada after that. After my BCom, I joined BMO, where I worked in investment banking for 3 years. I did move to France and I lived there for 3 years. The first 2 years, I was working as a placement agent, helping mostly European GPs raise capital from North American LPs. In my third year, I got my MBA at INSEAD. At that point, I got married to a Canadian, came back to Toronto where I worked at McKinsey for 3 years. And in 2010, I joined Clairvest as an associate. It's been a fun 15 years so far at Clairvest. I've covered and worked in a couple of different industries, from IT services to oilfield services. I worked in Ontario in our general equipment rental company called Contractors Rental Supply. I led our investment also in Ontario in a residential HVAC replacement called the Right Time Group. And then today, I lead our investments in a clinical trial biosample procurement organization called Boca Biolistics down in Florida. I also, as do most people who work at Clairvest, work on our gaming franchise, which is a big part of what we do.
If I can ask you a little bit more about Clairvest, Clairvest has been around a long time in our marketplace. Sebastian, I know it's kind of evolved, but maybe tell us a little bit about the history of Clairvest in terms of its deals and the kind of deals that you do now.
So Clairvest is a 40-year-old mid-market private equity fund based in Toronto. And I like to say there's two red herrings off the bat. The first is, while we're based in Toronto, our last two funds were actually denominated in US dollars. And I would say 80+% of our activity ends up being south of the border. The second red herring is when one hears private equity funds, they tend to gravitate or think that we're talking about a buyout fund, a company that's in the business of buying businesses. And that's not us. Our mission is to partner mostly with existing management teams and help them create assets of strategic significance. We basically want to help them accelerate their growth, do more of what they've been doing successfully to date. Really, there's two things that I would want you to sort of remember about Clairvest, and it really all stems around what is our core philosophy, and that's alignment of interest. The first thing about Clairvest is that management and the board of directors are the largest investors in the funds we manage. So from Clairvest into Clairvest Equity Partners Fund 7, which is a US dollar $1.2 billion fund, we've committed $300 million. We're the largest investor in the fund by a factor of 4. And so we think and behave like principal investors. Third-party capital gives us scale, but fundamentally, we're sort of managing our own money. The second difference is, in any investment we're making, management has made a conscious decision to bet on themselves and use us to help them go further. And so alignment of interest for us, we've got a pretty strict definition of what that means. For us to partner with an existing ownership group, we're looking for the go-forward partners to reinvest 50% or more of their pre-money equity value into the transaction. And so because of that, if you look across the portfolio, and more than half our deals were minority shareholders. Now, I want to stress, we're not solving for a minority investment approach. It's really a function of the pre-deal capitalization, who we're backing and leverage. To make it a little bit more explicit, if it's a single entrepreneur who's rolling 50% of their pre-money equity value and we're using a bit of leverage, we'll end up being 30% of the equity, and we're delighted to play that role. In other situations, it might be a more fragmented shareholder base where there's some passive investors, people who have maybe stepped back, friends and family. If our partners are comfortable, we're okay with fully cashing out those individuals, and our partner will still roll half or more, and we'll end up being 60, 70, 80% of the equity, but we will never own 100% of the equity in any of our deals.
Sebastian, Clairvest is very unique in this model. I don't know any other investors in our marketplace who do it as purposefully as you do. I mean, obviously, people will ask questions that are inevitable in this model. Things like, how do you treat governance? When you have this kind of model, how much, when you say partnership with management, how much partnership are we talking about in the sense of how does governance work for you?
Yeah, so we're comfortable being minority shareholders, but I would say we're not passive. We've got a core set of key minority rights that we require. And those are really around sort of four key areas. The first is hiring or firing any member of the executive team. We want to be able to approve that because we want to know who we're partners with, and that can't change without our approval. The second is issuing debt or equity. Anything that can basically affect our standing in the capital structure, we got to approve that. The third is M&A. We want to be able to sort of sign off on acquisitions. And the last one, the fourth one, is really setting the annual budget. And the reason we care about that is really because in there is usually CapEx and management compensation, and we want to say. Now, we really don't think about our ownership and governance as being strictly related. And what I mean by that is, in the event that we are a 60 or 70% majority shareholder, but our partners remain significant minority shareholders, we'll actually extend those same rights to them. And so kind of the way we think about it is, from a practical perspective, it's going to be a 50-50 partnership, and we're going to have to agree on decisions to put them into effect. That usually makes people really skeptical and uncomfortable. They say, well, what if there's a disagreement? To which we say, over the life of a 5-year partnership or more, it's quite likely that there will be disagreements. And the perspective we take there is to say, look, we've invested a lot of our own capital, not just the fund's capital, but our own capital, so we care. But our partners have reinvested a lot of their money. They're thinking not just as hired management, rather they're thinking as partners who have invested their own capital and have a strong principal perspective. And so if there's a disagreement, if we can't agree, we get on a plane, we get in a room with our partners, and we talk it out. And the perspective we have is, if ultimately we or the deal team can't convince our partner that they should do something, given that they've been in the industry for so much longer than we have, that they know the business so much better than we do, if we can't convince them, probably we got to either try harder or it's probably not the right thing to do. And so that's kind of how we approach governance.
Can I ask you, Sebastian, when it comes to sectors, like, is there, given the fact that you focus on partnership, I mean, are you more limited in the type of sectors you play in, industries? What's the sweet spot for the type of deals, the type of capital you put to work, the type of deals you look for, the industry?
Yeah, so I would say we like to sort of take an industry lens. And maybe touching on the sourcing before talking about the sectors of interest, sort of how we go to market is every partner partners with a junior resource, and we sort of select industries where we see growth or at least stability in the overall industry perspective, where we see businesses that have some visibility into revenue and the ability to embed themselves or generate repeat customer relationships. Everybody's like looking for contractual relationships, and we've done a fair bit of that with our IT service businesses, with our environmental services, where we're literally collecting garbage from hundreds or thousands of households. We've done a lot of work in government services and operations and maintenance. But at the other end of the spectrum, we've also done deals in general rental, where the perspective is the contractors will never have enough equipment. And so they're always going to need somebody to help them with some rental equipment. And we want to be the ones who can embed ourselves with them to do that on a repeat basis. And so we sort of pick those industries, and then we very proactively go to conferences, network, try and get in front of entrepreneurs and really sell them on our value proposition, which is use us to realize a partial liquidity event for you or for some investors in your shareholder base, or use us to fund a very specific growth objective that you have, and know that you're going to stay effectively in operational control for the business for the duration of our partnership.
Sebastian, when it comes to sourcing, I got to imagine it's tougher to do sourcing when, I mean, I know there are very few sell-side advisors in the Canadian market that would focus on minority deals, or frankly, most of them focus on majority. So sourcing has got to be a much more intense or challenging proposition for you, in the sense that you don't even get the advantage of many processes out there, or low-hanging fruit, if you want to call it that. So how do you focus your sourcing strategy? I mean, how do you tell the story when a lot of times a lot of people in our market are pushing majority deals or outright sales to their clients? How are you selling the kind of, the Clairvest option?
So I think for the intermediaries, for the advisors, what we impart on them is our knowledge of the industries of choice. So they actually know us well, and we nurture the relations. They don't call us if it's not in one of the industries that we cover. And when they do, we're very upfront that we're going to present an alternative solution to what their client might be looking for. And one of the questions we ask up front is, what does management want to do going forward? Typically, if it's PE backed and management doesn't own any equity, it's unlikely that we would spend any time. If it's an entrepreneur who is exploring his options, then we're very interested in putting our best foot forward. But in a first round or a second round bid, we're going to differentiate on the quantum of rollover required. And we're going to kind of force that self-selection. If the entrepreneur believes in themselves and is excited, they'll select our deal. If they think that they're better off sort of moving on or taking a different role, then by definition, they won't take our deal. That's the advisor side of things. And then frankly, what we do is we very proactively reach out to entrepreneurs and try and get in front of them. So it's a lot of cold calling. It's a lot of pounding the pavement. It's a lot of trying to sort of figure out a way to get in front of them through networking or other means and making sure they understand that even if they're not looking to sell, they may be interested in what we have to offer.
Sebastian, what would be a typical deal size? Or what's a kind of an objective for you in terms of putting capital to work?
I would say our floor is probably in the $25 million range, give or take. That's got a pretty broad range of TEV sizes because we might end up owning 80% or 20% of the equity in that deal. And so think of us as being relevant probably in the mid to high single digits of EBITDA through to the sort of 20 to 30 range. Below that, we're just not going to get a check size to write and to work. And above that, it frankly will probably go more the route of a buyout. Not to say it's not possible, but the sweet spot is, I would say, entrepreneurial-led business, 10 to 20 years old, mid to high single digits of EBITDA is really where we start to dig in.
Can I ask you, Sebastian, what you're seeing in the marketplace? I mean, you're out there. Obviously, this has been a bit of a crazy year with tariffs really playing a big role in the deal-making environment. I mean, are you seeing opportunities? What's your sense on the ground as you look for these type of opportunities? Is it the market opened up for you? Because, we hear about a lot of people who would have gone to a process and are kind of held back, but now looking at other alternatives. Is that an opportunity for you?
Yeah, what I would say is the market is getting ruthlessly efficient in terms of entrepreneurs just are on the radar screen. With all the different sources of information that are out there, it's become easier than it was 10 years ago to sort of figure out what are the businesses that could be of scale. And then with automation, there's just a lot more that you can do to try and sort of get in front of these entrepreneurs in a different way. But the balance of power is really with the entrepreneurs. They're the ones who are out there creating shareholder value and sort of creating economic growth. And so we have to work, frankly, that much harder to sort of communicate to them our value proposition. I think that's the single biggest change is really how efficient the markets have become at sort of uncovering these entrepreneurs.
Sebastian, obviously you're focused on partnerships and, even minority deals. I mean, as you look forward, I want to get a sense from you on the trends in the marketplace. You're unique in our marketplace because not many people are willing to do the kind of deals you do. Do you see that growing? Do you see that there's, an interest in these type of deals where you're only, a seller's only selling a minority or at max 50% partnering with someone? Is the space evolving, growing that you're working in, or do you find yourself still to be a unique creature out there doing these type of deals?
I think given how much deeper the private equity markets have gone in general, a lot more people are expressing an openness to consider minority deals. But when you press them and sort of understand, hey, have you done this before? Or what does your governance really look like? Is it creeping minority? Like there's still a lot of skepticism. And I think you have to look really closely at the track record of doing those deals if you're considering that type of partnership. It's very different for somebody to sort of have experience not being in a control position versus coming in as a minority and sort of saying, hey, as we issue more equity, as we do more bolt-ons, I'm going to come in and I'm going to ultimately get into control.
And, in that sense, when you look at the role you play with your portfolio companies, I mean, tell us a little more about the role you're playing in these companies. I guess that's part of the unique feature of your positioning.
So our role at Clairvest is to help our partners do more of what they've always done really well. And that's dealing with customers, dealing with suppliers, dealing with day-to-day management. So we definitely would never have sort of a forward-looking role in those types of responsibilities. Where we are much more active is around financing. We can bring our financing relationships with the banks to bear and sort of help our partners get access to better terms than they otherwise might have been able to. We're very involved in M&A. And on that one, frankly, we're involved on the front end, helping to source deals, helping to structure, and then we're involved on the back end, helping them to close. I would say for that diligence, for that middle part and ascertaining the fit, we're sort of asking questions, but we're really relying on our partner for them to have a view. And that's actually in line with our governance, right? If they don't want to do the deal, we can't force the deal. And if we don't like it, it won't happen. But the middle part, we're really relying on their opinion. And then we are very involved with the HR strategy. Our partners are typically seeing their organizations double or more their headcounts over a 5-year period. And the organizational strain that represents, we have a lot of experience that, and it transcends whatever industry you're talking about. So half our board meetings are really talking about the HR structure. Hey, how are your managers doing? When do you need to bring somebody up as you expand into a new market? How are you going to fill that role? And how are you going to fill the gap when that person moves over? We spend a lot of time talking through that with our partners. And then the last part where we are, I would say, more involved is around exit. We just kind of have the ability and the experience to sort of bring buyers, create competitive tension, either through sort of one-off discussions or through a broader process. And our partners typically rely on us to lead in there, knowing that we're fully aligned in terms of generating the maximum outcome for everybody.
Sebastian, we always ask our guests, we call it the crystal ball question, in a sense of just where they see the market going generally. I wanted to get a sense from you and from a Clairvest perspective. I mean, you've seen the kind of crazy year we've had in M&A this year. Where do you see the market going? With respect to the firm, respect to the type of deals you do you see any trends coming that we should be aware of or anything you see in particular?
I think there's a lot of talk across industries of the generational transfer that's happening, that's going to happen with entrepreneurs getting to a certain age. And for those who haven't necessarily planned through what a transition could look like, we can really be helpful. And that's where we're trying to position ourselves. Sort of take a partial liquidity event today. We'll help you work through the eventual transition if you haven't done that already, and sort of position you such that in 4 to 7 years, when it's time to sell, somebody else has already been running it. And sort of that, I think, is going to be increasingly a topic of focus and discussions with entrepreneurs who have been successful for 20 years to date.
Sebastian, thank you for joining us, telling us your story, telling us the Clairvest story. It's such a unique player in our marketplace, given the type of deals that have been done and such a successful fund. So thank you for joining us and telling us the Clairvest story.
Thanks very much for having me, Mario.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.